Hello TEQ crypto followers, welcome to our video. Today, we will share the technical analysis of SelfKey coin with you. We have already examined this coin in the past. If we look at it now, we can see that the upward trend has been broken downwards, and approximately, my friends, we can say that we have had a slight pullback in price movements around the level of 53.80, holding on to this level from the level of 6.533. We will see these in more detail on the 4-hour time frame, my friends. But for now, let's first look at our Bollinger Bands. The Bollinger Bands are currently in a relatively good position. The important thing is the middle line of the Bollinger Band. Price movements should break this line in an upward direction. If it breaks upwards, we have a higher possibility of seeing an increase in price movements. Along with this, if we look at our moving averages, we can see that it is currently holding onto the 200-day moving average, and at the same time, it is about to break above the 8-day moving average. First and foremost, the upward break of the 8-day moving average is important for us. Along with that, the second target is the 20-day moving average. If price movements break above the 20-day moving average, we can say that there is a possibility of seeing an uptrend in the medium term. Along with these, as we start our analysis slowly from our indicators, let's first look at our Fisher indicator. The Fisher indicator has currently experienced an upward breakout. It has broken upwards at approximately -2.48, giving us a strong buying signal, and after this point, we can say that we may see an upward movement in price. The further away the Fisher indicator breaks from zero, the stronger we can interpret that signal as a strong upward movement in price. After closing our Fisher indicator, let's continue our analysis with the WAV trend indicator. Currently, there hasn't been any upward breakout in the trend. Therefore, we can say that the downward movement in price may continue for a short while longer. However, we need to pay attention to a factor in WAV trend, which is the WAV trend volume. The WAV trend volume is currently approaching zero from the negative side. In other words, it is actually growing positively, and because it is growing positively, we have a high probability of seeing an upward movement in price. As we can see, the green line is converging with the other line, indicating a potential upward breakout in the near future. Therefore, we can say that following the WAV trend indicator can be beneficial for us. The further below zero it breaks, the stronger the potential for an upward movement in price. Similar to Fisher, the further away it breaks from zero, the stronger the signal becomes. Let's mention that, and after closing our WAV trend indicator, let's continue our analysis with the RSI indicator. The RSI is currently continuing its decline. It is still below both the average line and the 50 level, and due to the recent downward movement, we can say that we may see a further decline in price in the short term. It has not yet crossed above the 50 level, so we are making these comments based on that. If it crosses above the 50 level, we can see an upward movement in price because crossing above the 50 level is interpreted as a buy signal. After discussing our comments on RSI, we can close the RSI indicator as well and perform our short-term analysis on the 4-hour time frame. We can see that the short-term downtrend has been broken to the upside, and with this upward breakout, price movements have held around the level of 6.533 as we mentioned earlier. After reaching this level, even if it has started to decline, the first point it will reach is approximately the 53.80 level. After reaching this level, we want to see an upward movement again so that, in all likelihood, after reaching this point, it will turn upwards and rise to the level of 65.33. Suppose such an upward movement did not occur, and this level was broken to the downside. How far will the price decline? In such a scenario, the price could potentially drop to the 00 level of $41.50. Of course, there will be support and resistance zones in between. The level of $49.76 can serve as a temporary support zone. However, these temporary support zones are not very strong, making them susceptible to breaking. Therefore, we can consider the $41 level as the primary target. Unless the level of $53.80 is broken, in which case it would become the primary target. Now, let's address why the cryptocurrency market is declining. If we look at the Bitcoin chart, we can see that Bitcoin has been declining for the past 8 hours. As Bitcoin falls, we can observe significant drops in altcoins as well. The market operates based on this correlation. The more Bitcoin drops, the more the price movements of altcoins also decline. Why I refer to price movements, I am specifically talking about altcoins because even if Bitcoin drops by 3%, altcoins can drop by more than 10%. This is how the system works, and it is applicable to almost every coin. Currently, on the 4-hour time frame, we can see a downtrend in Bitcoin, even a descending triangle pattern. The upward breakout of this descending triangle is significant for us. If the descending triangle breaks to the upside, the price movements will find more stability, and it would be beneficial to follow the larger triangle pattern. The crucial level here is $25,217. This downtrend will continue until it reaches that level, and it should not break below it. If it breaks below that level, the price movements will likely drop towards the support level. In addition to the support level, if we look at the moving averages, the price will drop towards the 200-day moving average. The 200-day moving average is known to be significant as it has historically provided strong support. If the price holds above the 200-day moving average, it could be considered a buying opportunity. Therefore, the 200-day moving average is important. Currently, it is still trading below the 8-day, 20-day, and 50-day moving averages. If we want a long-term upward movement, we would ideally like to see it rise above the 50-day moving average, but the most crucial aspect is for it to stay above the 200-day moving average. If we had bought after the 200-day moving average was breached, we would have benefited from a nearly 30% increase. So, holding on to the 200-day moving average in the long term would yield better results. In the short and medium term, it would be better and more reliable for the price to rise above the 50-day and 20-day moving averages. Let's mention these points, and now let's wrap up our video after revisiting them. Firstly, to summarize, the level of $6,533 is important once again. We want this level to break to the upside, and if it does, we are likely to see significant upward movements in the price. The downtrend on the 4-hour time frame has been broken, which is really good news. However, we can see that the decline has resumed in the past few hours. We want the price to hold at the $5,380 level. If it doesn't hold there, the price could drop to $4,150. Therefore, it may be wise to set a stop-loss level below $5,380 and consider making a small purchase from there, depending on your risk appetite. Of course, caution is advised, and let's reiterate that nothing in our video constitutes investment advice. Once again, let's emphasize that. Now, let's slowly wrap up our video. In this video, we shared the technical analysis of SelfKey coin with you. If you liked the video, you can click the like button. To stay informed about future videos, you can subscribe to our channel. Thank you for watching. See you in the next videos. Goodbye.